No, your buy creates an FTD, but it also satisfies an old one. It's fun, right? So if they have a short FTD, who is it that said that? Trying to find your comment. J Ken. So you have a short FTD and then a long buy. This is cleared. This short FTD is cleared. This long buy then creates an FTD T plus 2 plus 35 days later. Unless there's a real share available, in which case, it's just a long buy. But if your purchase is satisfied synthetically, but then you have a long FTD over here, right? And then they can borrow a share. And short to clear that. It's continuous for a reason. But if what you were saying was the way it worked, FTDs would just continually increase. They would never be cleared. And FTDs kind of go like this. Can new ETFs be created and new FTD cycles be continued indefinitely? Yeah. And new ETFs can add GameStop to their inventory and continue it there. Most ETF holders of GameStop do not participate in this borderline criminal activity, right? Like Vanguard's not having any of it. Vanguard will shut off creation in their ETFs. BlackRock's not super happy with doing it, as evidenced by the fact that we're not seeing Vanguard or BlackRock ETFs on the reg show threshold, right? Even though they contain a far larger number of GameStop shares than State Street ones do. But we see XRT on there because XRT is kind of complicit in this, and that they, rob their own shareholders to allow this process to go on. Effectively stealing value off of the top of their shareholders' returns. Hypothetical example, 100 million shares in retail possession. How do you use CNS to clear the 25 million FTDs that will inevitably fail? And not continually, just once. You just buy stock. Right? If you have 25 million FTDs and 100 million shares are held, you just need 25 million volume. Volume is constant. Most of our volume driven by the options chain. That's it. You just need the volume. The opposite volume. So if you have 25 million short FTDs, you need to buy 25 million shares or match 25 million volume worth of sell orders. As liquidity dries up, FTDs have more and more of an effect on the realized price, right? Because there's less volume to satisfy that continuous net settlement. So then volume has to be generated. What's the secret to good risotto? Practice. Oh, SPY goes down, UVXY and GME go up. Trying to conceptualize what this means. Is there a way the GME community could stop XRT from creation? Buy a shitload of it? Seems hard to yeah, I don't, retail's not very good at, I don't think it would work out. Like a lot, a shitload of a bunch. You'd really have to buy a ton of it. No, selling clears FTDs too. It just clears long ones, bipolar bear. And theoretically, they can open up these FTD pipelines on multiple assets, right? So you have the GME FTDs, and then you have XRT FTDs, and you have IWM FTDs, and you have Vanguard Total Market FTDs, right? And these are all separate CNS pipelines. where FTDs can be stuffed, and you know, if they have too many FTDs, they can shift them over here and stuff them in there, and just use another ETF, and they can do this theoretically with infinite money. They could do this forever, but they don't have infinite money. Do you think we'll still have our quarterly run with OPEX? As long as the market doesn't destabilize this week, I think we're in a good position. Yeah. Like, more than I want us to go up this week, I just want us to fucking hold 120. If we can hold 120, I think we're in a good spot. All those fucking shorts they created down at 100, you know, that need to be cleared, now $30 higher, is good for OPEX. March does come after February. So periods of low volume, such as today, are bullish. Yes. Does that mean XRT shareholders could have a valid case for breach of fiduciary duty? Absolutely. Have they acted on that ever? No. So DRS... So less liquidity, more FTDs. Less liquidity, harder to clear FTDs. So with less liquidity, FTDs can cause more price improvement. But that's a double-edged sword, Shroomy Boomy, because less liquidity also means higher volatility, which means that the price can drop on lower volume as well. So these are, when volatility increases, price going up and price going down are both exacerbated. So, you know, with a lot of liquidity, maybe, you know, 50,000 share purchase would increase the price like 25 cents, right? And a 50,000 share short would decrease the price like 25 cents. Let's just keep it simple. But with low liquidity, the same purchase could increase the price $6. But the short could also drop at $6. Does that make sense? So increased illiquidity means increased volatility to both the up and downside. So the less liquid we are, the fewer shorts it takes to drop the price. I mean, I can show you a really good example of this. If we go out to GME on the monthly, and we look at the amount of volume it took, let's say here, this is a good one, October. So from the August run into October, can we do quarterly? Quarterly is better. There we go. Because we haven't had a run this quarter. So this quarter we have, maybe that's not good either. Do it. I don't want to add this up. All right. I guess this is good. So let's look at June. And so if we go from June to August, the August run up, you know, we have 28, 30, 60, 75, 86, 101. It's like 140 million volume for us to go from $350 down to our low during this period, which is around 143. Here, if we go from September's high at 250 to our low at 87, we had 130 million volume here. And the percentage decrease in price on less volume is far greater. So yeah, as we get more illiquid over time, we can also move far more to the downside, right? Like I think that explains it in a way that people can understand at least. I didn't get a chance to read Trades DD yet. I wanted to check it out tonight. No problem, Shermy Boom. What's the Dix at? I don't know. Oh, well, I guess we kind of have some information on Delta neutral at 115, a call reversal at 120. So we're still trading above. Lots of call OI at 150, 175, 180. Do you, Brave Vacation, do you know the gamma maximum by any chance? Currently? So illiquidity is a bonus for options plays then. Yeah, well, because IV goes up and then also the range of price movement is greater. And so options are very good at capturing moves like that. Do you care about Ortex data at all? My issue with Ortex is that the way they aggregate data produces a lot of incorrect results. And so you get a lot of information that may not really appear the same way from other sources. And so the main reason I dislike Ortex is you're constantly having to check other sources to verify your Ortex data. And then they have a lot of like data that's only theirs, which I don't trust at all. Like that proprietary data that they have, usually just kind of seems like bullshit to me. Someone doesn't want to cover sounds. I know, it's interesting.